Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his friend Dion. How you doing, buddy?
Howdy, doing great. Thanks for reaching out on a Wednesday. Yes,
I think so.
Wednesday.
Yes, Wednesday,
Ready for
Saturday,
round
Friday. Yeah.
3.
So as we ended round 2, we stumbled into a great topic for round 3, and that is the mindset of making every deal better than the last. This is something I have actually executed from 2000 and I don't know, let's call it 9-ish to the bottom in 2012 in my market. I did this, and it was critical to our business. It is something that you have latched onto. So why don't you talk about the importance of it, and we'll wrap about why I want all of my students, followers to kind of think this way.
So to start kind of from the beginning, for the last couple of years, we've had this really strong seller's market. Fear of missing out belonged to the buyers. We wanted to buy before prices went up or rates went up to the point where we couldn't get the yield we were looking for. So the tactics we were using were speed.
Yep.
You wanted to get in before the seller realized how many deal offers they were going to get. Some people waived contingencies. I would do higher earnest money. Some people would waive an appraisal. I would do, here's a $5,000 to $10,000 appraisal gap coverage, whatever I could do to make my offer sound better to the seller. Fourth 2 years.
Yeah.
What we're seeing now is the crash that you've been calling for about a year in transactions. Rates have gone up, buyers have backed off, sellers aren't getting multiple offers, multiple over asking offers. They're not getting their wish list price hit. They're not seeing what we saw for the last 2 years. Now fear of missing out is going to the seller side. They're thinking, did I wait 1 month too long? Did interest rates?
Yes.
Yes. So that's actually, sorry, that's actually a response I sent to a seller.
Yeah.
They listed for $1,030,000. Didn't make sense. I offered $990 at 11 days on market. So I was only 40,000 low on $1 million property. So it wasn't an insultingly low price. That, with the area average rents just low, like I estimate, would get me my yield. Not a penny more at current interest rates and current rents. I don't plan on rents going up. I don't plan on rates going down. It'd be great if that happened, but I'm not planning for it. The seller came back and said, we need to net $1 million. And I didn't say it in the first couple of days, but I sent back a week later when I checked to see where they were at. I said, if you wanted to net $1 million, you should have sold in December.
Yeah, should have sold. Yeah, earlier.
Right. And they didn't. So I'm waiting. They've now dropped to $1,015,000. So I'm expecting, I'm probably going to get a call in a week saying, is your offer still there? And my response is going to have to be, let me check what current rates are, because my offer might be $950.
Yeah.
Because I need to get my yield. So sellers are now in that fear of missing out. The more days on market we see, we're not going to see a market crash in price. We're just not. There is enough demand out there. I think we're going to see the nice stuff go quickly and the junk start to sit the longest.
Exactly.
But we don't need a crash in prices. We need that one seller that has to sell. And the longer that sits on the market, the more likely they are to take a price that makes sense to us. So that's our goal going forward, is every deal going forward. And this is why I think we're both excited, is for the next year or maybe longer. Yeah. The next deal we get will probably be one of the best ones I get.
Yeah, to give you a timing, I think you've got at least 18 months. It's 18 months on this low end, because again, this crash and transaction that I've been calling for has just started. It is happening right now in most markets. As I said yesterday, apparently not Littleton, Colorado, which is the most competitive market, but most markets, probably 90% of markets across the country. It might eventually get everywhere. But again, I don't invest everywhere. So it's happening in my buy box. It's happening in most of my students. It's going to be at least 18 months. It could be 36 months. This could be 3 years. Because again, it is one thing to call the crash, which I got right, but calling the bottom or the inflection point, no idea. Because I've done this before. The numbers got so crazy last time. Every deal was better than the last for almost 4 years. And dude, out of nowhere, Wall Street woke up. And they start buying the entire book sight unseen. I can't compete with that. My checkbook's not that deep. I like to buy certain ones, right? So it came in and changed it overnight, and prices jumped from there. So again, it's very different. And also, a crash in transactions is very different than a crash in price. People don't get it. I actually would rather have a crash in transactions because it's easier for me to find motivated sellers. Right? A crash in price, like we went through last time, is devastating to everyone. And adjustable rate mortgages, the setup's just not the same. So people calling for a 30% crash in price don't understand basic arithmetic. So no pricing crash in 2022. I'll talk about 2023 as soon as I know what the Fed's going to do soon. But yeah, crash in transactions, it's happening right now. It's only going to get worse. And what's going to happen is sellers are going to start raising their hand. You will start to see, and I've already seen 2 or 3 people tell me this. This is so funny because you can see it coming. The first 2 words on a listing are going to be motivated seller. I haven't seen that for a decade. It's going to be amazing.
Yeah, there's 2 offers, 2 words that are showing up in my local market too that I haven't seen ever in my investing. Make offer.
Exactly. Yeah. You'll see any offer reviewed or any offer looked at, or just, again, we have gone from FOMO of the buyer to FOMO of the seller. And it is for investors. I keep telling you, this is the time to do the work. And again, patience. Don't blow your wad in one transaction. I just told you it could be 18 months to 36. Let me just kind of do some math in my head. Let's assume it's 36 months. I would hope to do 8 to 10 transactions, all buy and hold, probably all residential, meaning 4 units or below. I would guess, let's just say it's 10. I would guess 2 or 3 of those are cash. 2 or 3 of those are kind of seller financing, maybe, 50, 40, 10s or something of that ilk. And then the others are probably other creative, because again, I'm going to learn more tools, pre-foreclosures and other things. So I look forward to dominating a market with more tools. It's the prepared, the active, the ones that are doing the work. It's going to be a good time. And you have time. You could do the work right now, learn your buy box in 90 to 120 days, and you're going to have 2 years to make hay. So it should be a lot of fun, I think.
So here's the mental shift I would like for somebody that's watching this right now to understand the difference between crash in transactions and crash in prices. During a crash in prices, you start watching the entire market looking for the best deals. Mm-hmm. In a crash in transactions, you start watching your market looking for the motivated seller. Instead of the best deals, you're looking for the motivated seller. So you're still going to hear your agent say, because your agent's job is to close deals and get the highest prices because they're paid on a percentage. Mm-hmm. They're going to say, look at this place. It just went in one day, 50,000 over asking. So our market is still on fire. Watch your market, your buy box for days on market, and don't listen to the one-offs. Don't listen to the things that are so overpriced, so sold fast, so waived contingencies that it makes the news. That's not what's happening in your market. Mm-hmm. That happened in your market, but that's not what is happening. What we're seeing is more inventory, mm-hmm. less buyers, the lowest mortgage application, and it's kind of a skewed data because that includes refis. Mm-hmm. Who's refi now, unless they have to, is a very small percentage.
Down 75%.
Right. That is definitely more than a 10% or 20% crash or correction. That is gone.
Mm-hmm. Gone.
Watch days on market and watch your buy box. Mm. And remember, when you hear about those ones that went over asking, those aren't the deals you're looking for. Yeah. Or maybe they were just listed low.
Yeah. Yeah. Always. The other thing to remember is we are clearly seeing demand and supply destruction. Transactions are going to fall off a cliff. It'll easily be down 50% peak to trough through this 2 or 3 year journey. And that, I want you to be excited by that. What do we want as investors? Or at least what do I want? I assume most investors are like me. I want time to make a decision. I want to get a great deal for me. In an environment of the last 2 years, fast wave conditions, large EMD, having to make a decision in 7 seconds, I can do that. I don't like to do that. I want to fish for the motivated seller. They have been impossible to find for 2 years, and they're going to be more and more and more because life happens. Some people have to sell. Like, I got to tell you a story. So in 2010, in my market, about, I think it was about 77 or 78% of transactions were REOs or short sales, and they were going for pennies on the dollar. What does that mean? That means 22% of the other sellers were actual owners, not banks. Can you imagine being in a situation where you want to compete with foreclosures and short sales? You know you're going to get nothing. Why would you sell in that environment? Sometimes you just have to sell. It happens.
So this is for the Game of Thrones viewers that are out there. And I was looking at my entire portfolio, which sounds like a lot. It's only 7 properties with 16 units. So my portfolio, almost all of my purchases, except for one, happened between November and March.
Ah, yes.
Because as a 4-unit or less investor, our largest competition is home buyers. Home buyers buy more in the summer. Competition is increased, so more people are buying. So that tends to be when I don't find deals, or when I do, I get outbid by people that are looking to move when it makes sense for their kids who are in school. Totally understand.
That's amazing.
But in the winter, when winter is here, that's when I find less competition, less deals happening, easier for me to find the motivated seller.
That's amazing.
Winter is here.
Yes.
It's not coming. We're in it.
Yeah.
We're in that crash in transactions. And this is when we're going to start to see, like the rest of my portfolio, except for one I bought in May, but the rest were all bought between the winter months.
Yeah.
And we're in it now.
It's funny. Actually, one of the early videos I did on this channel, I talked about I think it was like 3 years in a row, my deal of the year. I call it the deal of the decade, right? Because every year there's just that one deal that's amazing, was between Thanksgiving and Christmas, or Thanksgiving and New Year's. It's because everybody goes on vacation, and I compete with owners as well, like you, and they're like, nope, I'm on vacation, not looking, blah, blah, blah. So yeah, can you imagine what will happen this winter? So if you're thinking about getting into real estate investing, do the work now so you're prepared.
Well, one of the reasons why I could say winter is here now is look at all of the comments in these videos when we have these conversations of, I'm going to wait 6 months. I would not buy for the next year. Like, great.
Awesome.
You're adding to our winter.
Yes. Thumbs up. Yeah, it's yeah, this has been a lot of fun today. Really what I'm hoping is, going back to video 1, is I want people to recognize the forest fire has already started. It is probably going to be bad. I'm trying to scare people into actions. I am not scared. I had a video a comment the other day saying Zuber is scared. I'm like, are you talking about how I look because I'm trying to inspire? Or you think I am not scared. I'm on the sidelines, got a little campfire, roasted marshmallows, drinking, whatever. And I'll be ready when the forest fire is finally put out. So I am personally more excited today, and I've said this a lot, than the last 2 years. I've been doing this 22 years, and this might be the best 2 years of my investing career because I know the most, I have the most experience, and I have time to learn new things. So I am excited. So Dion, where can people find you, and closing comments?
Right here on YouTube, Dion Talk Financial Freedom. And since you mentioned it, I'll mention it too. You want to do around 8 transactions or so in the next 18 months. My goal is 2. I have the cash right now that I would like to deploy in a down payment to buy a regular investment property. And then I'm going to finally use my VA loan because I want to purchase a 100% financed property that's worth at least $1 million to try to bring my equity position down.
Yeah.
Right now I'm a little over 50% equity. I want to be around 30 to 35%. So I'm gaining appreciation on large enough multiple of what I've invested.
So your plan with the VA is a 4-plex, I'm guessing?
4-plex, house act, at least $1 million. Yep.
I like it. This is going to be fun, man. Dion, thank you very much for this. Thank you for giving us time. 3 great videos today. You have a wonderful day, sir.
Thank you. Ciao.